Despite every retail investor that just wants to jump into stocks these days, I'm going to give you the rundown on Vanguard Index Funds and why they're good for almost everyone, especially beginners. In other words, we're going to talk about why this strategy beats out picking stocks for 99% of people out there. Let's roll that intro. What's up guys, my name is Humphrey, welcome back to my channel. So today we're talking about Vanguard Index Funds. So why Vanguard Index Funds? Why does everyone seem to suggest Vanguard when buying index funds? What's the deal? Also, why is Vanguard so attractive to new investors? Let's talk about that today. So let's talk about today's video format. In section 1, we're gonna cover what an index fund is. In section 2, we're gonna cover who they're actually good for. In the third section, we're gonna cover the index fund pros and cons. Then we're gonna get into why Vanguard is the best choice for buying an index fund. And lastly, I'm gonna leave you with some Vanguard index funds that are great starter funds for any investor or any beginner investor to start looking into. So let's get right into number 1. For those of you guys that have been watching my videos, you'll know what an index fund is, but if you don't know what an index fund is, this is a quick refresher for all you guys. Essentially, an index fund is basically a pooled investment among other investors, and what you invest in is an underlying index or underlying benchmark. By buying into that one fund, you get a small percentage of everything that it actually invests in. So for example, if you were to buy an S&P 500 index fund, by buying that one fund, you would get a small percentage of every stock in the S&P 500 because that index fund is tracking that index, the S&P 500. Now, by definition, ETFs and index funds are slightly different, but for today's video, we're going to be covering some ETFs, and they are also a key piece in a passive investing strategy, so we're going to talk about those as well. So that brings me to part 2, which is who are these index funds actually good for? Index funds are great for passive investors that are just trying to match market returns, as well as people that don't really want to do any stock picking. So those people that don't want to do stock picking are typically really busy people. They don't have the time to look up all the earnings reports, and so they just want a more passive investing strategy where they can just literally set it and forget it. With an index fund strategy, most people are going to outperform any stock picking strategy over a long period of time unless they're actually professional stock pickers. And even then, professional stock pickers sometimes can't even beat the performance of an index fund. It's why people like Warren Buffett think it's the best way for everyday investors to actually grow their money. So if you're the type of person that wants a passive investment that's also really well diversified, putting some of your investment into an index fund can actually be quite beneficial, especially if it's for the long term. Index fund investing is so popular that as of March 31st this year, the US index funds actually had $3.79 trillion in assets under management. Compare that with $3.53 trillion in active managed funds, we can see that the passive investing strategy is more popular and has the majority of funds invested in it. Now you're probably thinking to yourself, but Humphrey, there's got to be some cons to owning an index fund, right? I mean, it can't always just be good, or else it would just be too good to be true. And that's why we're going to go over the pros and cons of owning index funds right now. The first thing that you need to know about owning an index fund is they typically have very low fees. Now, something that the financial industry doesn't tell you is how much of a fee is too high and how much of a fee is too low. You're kind of just left guessing. You might be investing in a mutual fund and you notice that the fees per year are 1% per year, and you're probably thinking, man, 1% doesn't sound like a lot. It doesn't seem like a lot. If I spend $100 investing in something and they're only taking $1, well, in the financial world, 1% is a crap ton. In one scenario, analyzed by a NerdWallet study, paying just 1% in fees would cost a millennial more than $590,000 in sacrificed returns over 40 years of savings. That's why when we're looking to invest in something, we gotta really check what the fees are and make sure that they're not too high. If you invest in index funds, the fees are actually pretty low, usually between 0.2% and 0.5% per year on how much you have invested. Compare that to the average mutual fund, which has an expense ratio or fee per year of between 1.3 to 2.5%. Now we're gonna get into this a little bit later about why Vanguard is so good, but Vanguard has some of the lowest fees on the market, with some of their index funds being as little as 0.04% per year. But before we get further into that, let me go over the next pro of owning an index fund, and that is that they're less risky. Essentially, you don't have all your eggs in one basket. So for example, if you invested all of your money into Apple stock and one day it just crashed, well, your money and your investment would be also crashing as well. So essentially, because they're so well diversified, you just get natural lower risk. The next pro with index funds is, again, they are completely passive. You just basically put your money into an index fund and the rest will take care of itself. You'll know that over time, at least the minimum that you're gonna do in terms of performance is at least match market returns. And the last pro is that it removes the need to study company earnings reports, resulting in you being far from average. Even though it's a simple strategy, like just putting money in index funds, you're gonna be generally doing better than average most of the time. Now, let's talk about the cons of index funds, because there are some cons that you should know about. The first con is that you can't really react too much. So basically, if you think a stock is overvalued, you can't really do anything about it if you're buying into an index fund that holds a lot of that stock. For example, a lot of the index funds that are out there are overweighted in tech stocks because those are the stocks that have the highest market capitalization. So basically, by buying it into an index fund, you're essentially putting a lot of money into the tech sector just naturally through the index fund itself. But because you're buying into that index fund, it's not like you have the choice. You can't really pick and choose what stocks you want in the index fund or not. It's basically all or nothing in terms of what they offer. And that's the second part of the con. You don't have control over the holdings. So the first was that you can't really react. And the second is you don't have control over whatever is going on in the index fund itself. And the last con is that it's just not as satisfying to some people, especially those people who love to put in the due diligence and the homework into studying company earnings reports and then getting the high off of a huge investment return. You're just not going to have that with an index fund. But my guess is that if you're watching this, you're probably okay with that as long as you're making money. Am I right? Am I right? So that brings me to my next section. Why are we going to choose Vanguard funds over all the other index funds that are out there? Now, you don't have to choose Vanguard funds, but there is a reason why most index fund investors choose Vanguard, and let's talk about those reasons why. First, their fees are the lowest in the industry. On average, the Vanguard fund expense ratio is 83% less than the industry average of other index funds out there. With an average expense ratio of 0.1%, compare that to the average ETF and mutual fund expense ratio of 0.5% across the industry. It's just way cheaper to own a Vanguard index fund. Second, Vanguard is the inventor of the index fund, and they have a huge selection of index fund and ETFs. You'll see that they actually offer an ETF tracking almost anything from small cap to large cap to REITs, so on and so forth. Third, they produce consistent long-term returns. 84% of their index mutual funds and ETFs have performed better than their peer group averages over the last 10 years. Those are the main reasons why people choose Vanguard over any other provider. So I'm personally invested with Vanguard with my Roth IRA. My entire Roth IRA is being held at Vanguard right now. This video is not sponsored by them in any way. I just really like the product and the whole industry really likes the product. So I'm just letting you guys know what's up. I've always really liked Vanguard for the offerings that they do have. Now the interface is actually very difficult to use and it's not very intuitive to use. It does take some getting used to, but if you spend some time in there, it does become more intuitive and they do have good customer support in case you ever need that. So what are some of the best index funds and ETFs from Vanguard to start with? Let's talk about that. So here are my 3 favorite ones, and I talk about these index funds in my recent video called Simple Investing Portfolio that I'll link in the description below, but let's go over these index funds, and the first index fund is actually called VTSAX. VTSAX is literally the entire US stock equity market. For the past 10 years, it's returned about 14.93%, and since it was created in the year 2000, it's been returning 7.41%. Now, your initial investment with VTSAX needs to be $3,000 for the index fund, but if you'd like to buy the ETF version, that's a lot cheaper and it's just ticker symbol VTI. Let's look into its top 10 holdings. We see that it does hold a lot of tech stocks, but it's also because those are the biggest companies in the entire stock market right now by valuation. I like to have VTSAX in an investment portfolio and then build around it because once you own the entire US stock market, you can supplement it with other sectors that you like. The next Vanguard fund that I really like is ticker symbol VGT. This is an information technology ETF and basically it owns a lot of technology and information technology stocks. It's weighted heavier into Microsoft and Apple. Those are its 2 biggest holdings. So if you want more exposure into the tech sector, VGT would be a great way to do it in a well-diversified manner. Its return for the past 10 years has been crazy, 22.29%, with shorter term results even crazier, but again, that's due to the market as of late. Now, if you own both VTI and VGT, you're gonna have a lot of overlapping investments, so that's why it's best to diversify all your investments so that your total portfolio holdings has a well-diversified mix within it. Now that's just being really nitpicky. I mean, index funds and ETFs are pretty well diversified anyway, so I don't really see the big danger in having overlapping investments, but if you think you're too exposed into one sector, you could complement it with ETFs and index funds from other sectors to balance it out. And that's why my other favorite ETF from Vanguard is actually ticker symbol VEU. Now, this ETF is basically an international holdings ETF without any US equities, so it hedges your bets against the US equity market by placing some of your bets into the international market. The top 10 holdings in VEU are, for example, Alibaba, Tencent, Taiwan Semiconductor Manufacturing, and Nestle and Samsung. Over the past 10 years, it has returned 5.51%, which is a modest return. But again, I treat this in my portfolio as somewhat of a hedge against all the exposure I might have in US equities. If you'd like to read more about all the ETFs that Vanguard offers, I'm gonna put a link in my description below so that you can check out that resource at your leisure. All right, guys, if you got any value out of this video, which I hope you did, make sure to hit that like button for this video, subscribe to my channel, and tick the notification bell for whenever I drop a new video. Make sure to follow me on Instagram. I post something there pretty much daily. If you're bored scrolling on the gram, you might as well just follow me, and maybe I'll make your life a little bit more entertaining. Lastly, if you want a free stock from Webull, when you deposit $100, you'll get a stock valued up to $1,400. The link to that is also in my description below. Lastly, I just need to thank all the Patreon supporters I have because I just revamped my entire Patreon. So if you'd like to check that out, please do. But I just want to say a quick thank you to all the patrons supporting me right now. And that is, there's only 17 of you guys, but that is 17 more than I ever thought I would ever have. So thank you, Alexander. Thank you, Amy Romero, Andre Zita, Brian, Caleb, Cassie Bull, Daniel L, D Shibby 5, Eric Woods, Harit Patel, Jonathan, Juan, Mike, Tanner, Taylor, Thomas, Tail, and Yoshi. Thank you guys so much. I'm gonna try to include Patreon supporters in the credits of my videos in the future, but thank you guys for being here. I really appreciate all of you guys. I'll see you guys in the next one. All right, peace.